Hey, it's Rob, the Ignorant Entrepreneur, and today I pick up my political pitchfork. I stand up for all of us out here that are just trying to make it by investing. And what do these powers that be want to do? They want to tear us down. Today I bring you something that is very close to my heart. Something I am very passionate about because I've lost hundreds of thousands dealing with this. So, US lawmakers propose adding digital assets to the wash sale rule and raising capital gains tax on cryptocurrency. Now, if you don't know what wash sale is, this will affect you if you're a swing or you like to trade a lot. You will learn what it is because it will affect your taxes heavily. Basically, what a wash sale is, it's a way to completely destroy the little man, and I'll explain why. And I'll give you the textbook definition. The wash sale rule is an Internal Revenue Service or IRS regulation that prevents a taxpayer from taking a tax deduction for a security sold in a wash sale. The rule defines the wash sale as one that occurs when an individual sells or trades a security at a loss and within 30 days before or after the sale buys a substantially identical stock or a security, or acquires a contract or option to do so. So by substantially identical, it could be the same stock, or it could be like Class B shares of the same stock. Substantially similar does not mean if you're trading, let's say, Coca-Cola and Pepsi. Basically, if you violate that rule, you can't deduct the loss on your taxes. So if you lost $100,000 and let's say you violated that wash sale rule, so all you did, you sold out of a losing trade in Amazon and you decided within 30 days to buy back at a lower price, you can't report on your taxes that you lost that $100,000. You just got to eat it. They're going to treat you as though you never lost $100,000. Yeah, I know. Insane, right? And they say the reason that they do this is it was designed to discourage people from selling securities at a loss simply to claim a tax benefit. But it's crazy. It's nonsense. If you lost $100,000, who cares if you're taking a tax benefit by claiming that you lost it? You lost $100,000. You still lost it. You buying back at a lower price and it could go lower. The company could go bankrupt. I mean, these are stocks. Nothing's guaranteed. So it's completely, and when I explain to you how the big guys are able to entirely avoid it, you'll see how crazy it sounds. But to apply this to cryptocurrency? Come on, bruh. This ain't right. But moving ahead, because you'll want to know that Democrats in the United States House of Representatives have proposed tax initiatives that could affect crypto users to fund a $3.5 trillion spending package. And yeah, that's the one that you guys have been hearing a lot in the news. According to a document released by the House Committee of Ways and Means on Monday, the proposal would increase the tax rate on long-term capital gains from the existing 20 to 25% for certain high-income individuals. A surtax of 3.8% on net investment income would seemingly apply to the proposed changes, bringing the U.S. capital gains and dividends tax rate to 28.8% for wealthy crypto users. So like I said, in addition, the tax plan would add digital assets to the wash sale rule, which prohibits investors from claiming capital gains deductions on certain assets repurchased within 30 days of a sale. And this is, of course, previously applicable to stocks and other securities. Existing tax laws under the IRS consider cryptocurrency as property in wash sales, which some crypto users have been able to use to avoid those capital gains, while the proposal from U.S. lawmakers could close this loophole. If passed and signed into law, the plan would require crypto users to report taxes according to the new wash sale rules starting on December 31st, while the capital gains tax rate would apply to transactions made after September 13th. However, the bill for $3.5 trillion spending package has not yet been finalized, and so this is not set by any means, but still it should be a cause for concern. Now look, let me kind of expose this sham by the IRS, and I really do mean it. It's completely designed to take out the little guy. So this is designed to discourage people from selling securities at a loss simply to claim a tax benefit, or so they say. But then tell me, how do high-frequency trading firms get away with selling and buying the same stock by the second and avoid this rule? How are these big players avoiding wash sales? Well, get your $1 million lawyer, because hidden among the countless rules of the Internal Revenue Code lies a provision that extends huge advantages to certain taxpayers. The provision offering these underused advantages is the SEC 475F, which allows taxpayers to make what is known as a mark-to-market election. In short, if an individual or group qualifies, he or she is allowed to treat losses from the sale of stocks and other securities as ordinary losses rather than capital losses. Eureka! Now, what does this mean and how can you qualify? I'm gonna be real, I'm not quite there yet. But I can tell you this. Apparently, we're all classified into 3 different groups as being either a dealer, investor, or trader, right? And all I'm saying is, you can see on the screen in one of these exhibits, certain groups, and we know the groups, The groups with millions of dollars, the lawyers, the groups that are able to finesse and finagle the code are able to avoid wash sale rules altogether. So who are they really preventing from taking, as they call it, tax benefit? We know the answer. And that's why I say, man, it's a complete sham. I have no trust in it at all. Trying to prevent people from taking a tax benefit when they've lost the money. So again, I just hope to educate you guys about this. Maybe if you don't trade as frequently, this does not really affect you, but it will certainly change the landscape in the crypto field among regular investors. Because I assure you, the big companies, they're going to be fine. They're going to be straight. Anyway, like, comment, and subscribe. This has been my own little twist on this. I hope you enjoyed. I am the Ignorant Entrepreneur, and I'm out.